Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, we have a lot to cover today, guys. The markets are seeing some red after yesterday's big-time rally. Let's follow me over here. Let's take a look. So first, I want to just go over yesterday's action. Yesterday, we saw a big green candle to the upside. The market's basically getting back 50% of what they lost yesterday. Impressive, but the volume was very, very light, and also it was a market that looked almost choreographed. And what do I mean by that? Well, if we go to the intraday chart, let's take a look at the intraday. Look at yesterday's price action. It was just up, 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 up. There was no major pullbacks. You had one red candle there, one there, one there, one there, and this is the 10-minute chart, by the way. So almost no red candles, very meticulous, controlled move to the upside. Now, again, that doesn't change the fact that it was an up day, so we have to be cognizant of that. But again, it makes me always suspect. What are they trying to do? What's going on here? So if we go back to the daily chart, one thing we do know looking at the charts is clearly that the S&P 500 is still underneath this resistance level. Very clearly, we have this level that we were into right here. We have this level right up here. Again, those are your all-time highs, that upper level, and we're still underneath that. Now, today we are seeing the markets come down. The markets are selling off today on the back of Samsung warning in the overnight, or at least my overnight. It was the daytime over in Asia. But again, Samsung warning that sales or earnings will be down 35% in the coming year, essentially, because of chip sales to phones. All right. So again, this is influencing the semiconductors. This is influencing basically technology as a whole. And it's starting to cast a light on a slowing economy, especially for phones, which again, interestingly enough, remember, Apple was just downgraded to a sell rating last week and a secondary downgrade later in the week. And again, now we're hearing about these chip sales. First thing I think about when I hear that, by the way, is that, okay, did someone know this Samsung news was coming last week and was smart enough to put that downgrade out ahead of time on Apple? Maybe, maybe not. I'll leave it to everyone to decide. Okay, so that's number one. If we flip over to the NASDAQ 100, this is your intraday NASDAQ 100 chart. Same vertical nature to it. If we look at the daily chart real quick, again, big red candle getting back about big green candle getting back 50% of what we lost in the last 6 trading days or 7 trading days. Essentially, again, it was one of the worst starts to a year going into it. But what did I say to you guys? I said, listen, as long as we don't break key levels like this to the downside, this is just a pullback, and the markets are rebounding per yesterday. Now, if we go back to the 10-minute chart and we flip over to pre-market data, we can see that, again, the markets, here's where we closed yesterday. We went sideways yesterday after hours. We dropped initially, and now we've been stair-stepping down. So again, in the scheme of things, if we look at yesterday's price action, this is where yesterday started, right? And this is where it ended. We are only retracing, I would say, about 1/3 to maybe just slightly less than 1/2 of that move at this point in time. But again, I do think that this is another kind of crack in the glass, if you will, for the overall soft landing scenario. China's economy is in shambles. We're seeing South Korea also struggling here. Samsung telling us that things aren't so good. Samsung is a global company, obviously. And again, we have to take warnings from what we're hearing. By the way, I just wanted to talk about this real quick as we go into something. So I look at divergences, and there's a bunch of interesting things when you look at divergences, whether it's RSIs or whatnot. But one of the interesting divergences that you don't hear much about is looking at the overall stock market and its performance versus, let's say, cost of living, or let's say your lifestyle. And the reason why I bring that up is it's important, right? So if we go here, let me bring up the actual NASDAQ chart real quick, as we take a look at the NASDAQ composite and we flip over to the longer time frame, right? So if we look at this, and let me flip over to the NASDAQ. So this is the NASDAQ chart, right? And what you could see here, and this is what I would call a negative divergence, is that your cost of living, my cost of living, the general life that people are living, has it gotten better with this vertical move in the market, or has it actually got worse? Has your living style actually deteriorated? And so what you have here is, you could say that in general, we have something like this, right? This is your lifestyle deteriorating, or what you can afford, what your money buys, how overall society is doing. We know that the middle class is shrinking, the poor increasing, more and more people are becoming poor. I was just reading about the homelessness, even here in Florida, is surging dramatically. And again, you have a divergence. You have an up market, vertical market, but again, the living style and what people can do, what people can afford, how people are living is going lower. Again, this doesn't tell us that a market crash is imminent. It doesn't tell us that a market depression or economic depression is imminent. But what it does do is divergences tell you something is eventually coming. Yesterday, we talked about solar cycles. I saw the response. I see you guys want more information on that. I will put together something for later this week or next week on solar cycles. But again, one of the things I do know is that if you look at the Great Depression, the same things were going on. The Roaring 20s was great for a lot of people, but there were a lot of people that were slipping out of that. They weren't invested in the Roaring 20s going into the Great Depression. And you saw this same divergence. You saw the Roaring 20s leading up to the stock market collapse, the crash of 29, and you saw the same kind of decline in lifestyle like that, exactly what we are seeing right here. So again, my job is not to, my goal is not to freak you out, right? My goal is to present information, and you guys can take it, you can leave it, you can throw it out, you can digest it, whatever you want to do. But I do think it does warrant some sort of, just awareness, right? The media is going to spin narratives. Even social media spins narratives. I'm going to just throw stuff out to you, lots of stuff, and you guys take it and do what you want with it. Okay, so we know the markets are lower today. I do want to go over a couple different charts here. Number one, Samsung. This is the Samsung chart. We can see it dropped here in the latest day. This is trading over in Asia, obviously. And again, that warning has sent ripple effects through the U.S. today. We are seeing technology generally selling off. The one stock that's staying resilient is NVIDIA, which had a monster day yesterday after announcing basically a new chip. So again, that momentum is staying, but most other semiconductors are slipping and moving decently lower. Now, interesting thing on this chart, I want to just show you something. So we look at charts and we always talk about, do charts predict price action? And the answer is that nothing predicts anything, but it's probabilities, right? Probabilities. So if I were to just take a trend line, and this is why I love the simplicity of trend lines, right? If we just take a trend line right here and we just draw a trend line right up through these recent levels, right? So basically what we're doing is we're taking this pivot point here to pivot point here to here. Look at where Samsung just recently went up to. It just tagged this level. And lo and behold, what happens? You get this warning, this profit warning, and price comes down dramatically. And again, what this is it's telling us, it didn't give us 100% definition that this would actually hit and pull back here, but it's probabilities. It's pushing us into that, saying, okay, extended chart, you can look at metrics like RSI, see where the RSI is trading. Those just give you information, but we know that this is a trend line that past has caused reactionary selling, and therefore you extrapolate this might be a sell side action as well. Sure enough, it was on Samsung. All right, now looking at NVIDIA, guys. NVIDIA, again, is trading fractionally higher today while the rest of the market is down. A couple things I want to go over here. I do have an upside max move target on NVIDIA. One of it, basically what I'm doing here is I'm using a parallel. I'm going to actually flip to the weekly so we can see it a little bit clearer on the weekly chart here. Again, this gives you a little bit of a clearer sign. But basically, we have this pivot point going back all the way to 2021. We have these two pivot lows. We align a trend line through that high, right through this high, and that gives us around 535 to 540. So again, I do think there's a potential for a little bit more upside on NVIDIA, but I do think it's getting close to a level where, again, last time it hit, we had a pretty significant pullback. You went from $500 to $400. Maybe we go from 540 to 440. We'll have to see what type of pullback we get off of that level, or if we get one at all, right? You just don't know for sure. It's all about those probabilities. All right, couple other charts I want to go over here. So if we look at a chart of Apple, right? Apple had a big bounce yesterday. And don't forget, guys, Apple, if we put the 200 moving average on, look at what that tagged, right? So just a couple days ago, we talk about probabilities, right? There's your 200 moving average. Price was down how many days in a row? like literally over 10% on a $3 trillion company into the 200, what do you think the probable outcome is? I mean, just again, it's all about logic and keeping emotion out of it. And I'm going to go over a chart of gold versus the Bitcoin ETF expectations to talk about probabilities and getting emotional. But again, when you look at Apple, it was at $200 up here. It fell to basically 180 right down here, a 10% correction, almost in a straight line. You're hitting the 200 moving average. Are you apt to see a bounce? And also, by the way, we're also right into this level as well, a secondary pivot right there. Do you expect a bounce on Apple? And the answer is yes, and it got that bounce yesterday. Now, with the chip warning from Samsung about phones, it's not surprising to see Apple pulling back a little bit today. But honestly, based on this, I would not be overly surprised after a pullback maybe today from that monstrous move yesterday if maybe we see continued upside, maybe even filling the gap around 192. 192, this becomes a significant short, in my opinion, once again, versus a long right here. And again, that's the beauty of being a trader, right? And listen, a trader actually has to study, folks. It's not an easy thing. You don't just learn to draw these trend lines magically. You actually have to put some work into it. But I love showing how, you have someone who's just a hodler, right? Someone who's just long, and there's so many opportunities. Like just right here, you had a classic double top right here on the chart of Apple. Apple, we know, again, look at the vertical move into that move. You have double top. What do you think is going to happen? You think a pullback. Where do you go long? So here's your short. You flip your short right there. You go long, and there's your bounce. We get back in here. You start to look to short it again at that significant retrace. And by the way, that's about a 618 Fibonacci retrace as well, right at that gap fill. So it's, again, it's not for everyone. A lot of people, if you don't have a lot of time, buying and holding is probably the best solution. I happen to do this literally every day, 12 hours a day, more than that, frankly, on the charts. Okay. Now, let's get into this, guys. I got to talk about this. This, to me, is the most significant point of this video because it's going to educate you in looking deeper than the narrative that social media is spinning or even the mainstream media. And again, it's all about thinking for yourself, and it's all about logic. The best traders in the world are ones that are not going to get flustered. They think logically. They go from A to B to C, right? And again, if you're someone cuts you off in traffic and you freak out and you're honking and you're giving them the finger and all that stuff, that's emotion. Recognize it. The more you can control it, the more you will be a better investor and trader. You have to look at it without emotion, charts without emotion. This is resistance. This is support, right? So in any case, when we look back, the narrative I've been seeing on social media is, hey, look at what gold did after the ETF launch. This is the GLD chart, and this is when the ETF launched, right over here in 2004. Okay, so again, looking at it, you're like, wow, look at the monster move. The GLD went from like $45, $70, $80. So the narrative can be very easily spun to make you say, wow, so if the Bitcoin spot ETF launches, that must, that's going to be incredible. It's going to go up 100%, just like gold did. Not so fast. And by the way, do I know what the price action on Bitcoin is going to do when this ETF launches? No, I think it's going to pop to 48 to 50. That's all I've said for the last month. That was my upside target. After that, I have no clue. But what you have to do is you have to look at what was going on during this period of the run-up in gold, right? You just can't be one-dimensional. I hate one-dimensional thinking. It is literally the undoing of probably society as a whole. So what we do is we flip over to the DXY. Let's take a look. So in 2005, when gold began to rally sharply higher, when the ETF on gold rallied sharply higher, what the heck was the dollar doing? Well, the dollar was up here and it dropped almost 25%. So really, you could argue that maybe it didn't have so much to do with the ETF launch of gold on the GLD, but the dollar dropped 25%. So obviously gold is going to go up, right? And then you see this big bounce in gold, in the dollar. And believe it or not, even with this big bounce in the dollar, gold still went up even more. Do you know why? Because this was the financial crisis. So the dollar became the safe haven, but gold was also a safe haven. So everyone was buying more gold because everything was collapsing. Banks were collapsing, Lehman Brothers, you name it, all these other things. And so you have to kind of put it in a context. And my point is to just inform, right? It's not to say that Bitcoin's not going to continue to go up after. I think this spot ETF over the long term is going to be very, very beneficial for getting more people involved in Bitcoin. I love it. I'm a big long-term bull on Bitcoin, but I'm also a realist, and a realist looks at all the factors here. So when you look at the dollar, it starts to come into a picture that really, based on the dollar drop and then the financial crisis, that's why, if we flip back to the GLD here, that's why you got this significant move here in gold, right? And again, I think that's really important to understand. All right, so in any case, just wanted to kind of point that out to you guys so you can understand a little bit more in context and not necessarily get fooled to thinking it's a no-brainer that Bitcoin's going to double in price just because the spot ETF launches. Again, that's a narrative being spun by a certain group. Be more logical, look at the data and the facts. All right, back to center screen. Here we go, guys. And I just want to say, before we get into some other charts, we're going to take a 30-second break just to thank iTrust Capital. Check them out, guys. They got some really cool stuff in terms of putting Bitcoin and crypto in your 401ks and your IRAs and stuff like that. Take it away, guys.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All righty, guys, back we are here. Take a look at the chart. This is Bitcoin's chart. Notice again, we did close yesterday outside of that channel. So let's take a look at this. What does this mean? To me, the fact that it closed outside of the channel probably continues to insinuate that we're going to go a little bit higher when the spot ETF is approved. Now, everyone has been talking about, I mean, let's be fair, right? Again, let's talk about social media or the media in general. Everyone was saying, oh, by last Wednesday, then it was last Thursday. Oh, it's got to be by Friday. I'm hearing Friday. Then now it's by Monday. Now it's by Tuesday. Now it's by when. You guys get the point. Is that it'll be approved when it's approved. My guess is, from what I'm hearing, again, it's probably Tuesday or Wednesday, today or tomorrow. But the point being here on price action, which is the most important thing, we closed above resistance. So this continues to tell me that the probable move is still to the 618 Fibonacci retrace level at between 48 and 50,000. Now, again, overall, once we get up into that range, there is significant resistance. Doesn't mean it can't break it. It's just a probability metric, right? Meaning that, again, you're going to run into a lot of resistance there based on the fibs, based on resistance, based on trend lines, all of those factors. So again, I still think it's got a little bit more upside. I love the fact that in the overnight, it traded back in this channel, yet right now it's still above. Let's watch and see if this news hits, what is going to happen. Another thing that makes me actually think that Bitcoin might be due for a pullback once we hit 48 to 50 is if we look at the chart of Bitcoin dominance. Now, Bitcoin dominance also has a channel, but it has not broken out of its channel just yet. And so if we look at Bitcoin dominance, we see very clearly we have high, high, high. And look at this. We literally have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 straight up days on Bitcoin dominance right now. But we are not at the highest level of the channel. That level channel is around 56.5% per this chart that I'm pulling from TradingView on BTC.D. That's the chart on dominance here. So my guess is you get this approval and you see that quick spike up maybe to 50,000 and then Bitcoin begins to pull back. And that's again how I'm going to position myself ultimately for looking for that pullback. Obviously mitigating risk via position size as well. Okay, a couple other charts that I want to go over real quick with you guys here. I do want to take a look at uranium. Uranium, guys, again, we have this potential little period here where we could see right here, right? So potential cup formation. What we're going to look for here is, can this chart ultimately, basically, can it form a cup pattern? And again, basically, here's your cup, right? Okay, and there's your cup. And in fact, I'm going to change it to yellow. I think you guys can see the yellow a little better. What we're looking for, again, here's your cup. We're now looking for this consolidation. Now, this is key, guys. When you're looking at a cup and handle pattern, you want your handle of the cup to be anywhere between a right angle like this, where price goes like this, to a 45-degree angle. Right now, it's a little steeper, but it's still within the range. If it starts to bounce like this, that's the optimal setup. And again, basically, this goes into what's a handle? What's a handle? It's basically a bullish consolidation pattern, right? And again, it creates this nice, cool talking point. Oh, it's a cup and handle pattern. But in reality, it's a move which retests the double top, and then you get the bull flag off of it, which is the handle pattern. All right, so again, still looking at this, it's been a nice move. I continue to favor this as a good investment probably over the next 3 to 5 years. I still think that ultimately uranium and nuclear power is something that this world may have to move towards, even though we are seeing oil coming in generally in recent days and weeks. Speaking of oil, let's take a look at oil here. All right. So this is something that's a little bit freaky on oil, guys. And again, the only reason it's freaky, I mean, for gas pump purposes, it's awesome, right? Seeing oil potentially going way, way lower is great. But one of the things we have to recognize is that you might have a bigger head and shoulder pattern developing on oil. What do I mean by that? Well, you have this, and then potentially something like this. And the reason why, and again, look at the neckline, perfect pivot point to pivot point to pivot point here, right across here, keeps hitting and hitting and hitting. And the key is this, is that if you calculate out the target from here to here, the highest point to the neckline, you actually get oil potentially going back to like sub $10 as a target. And again, the only reason I bring that up, first of all, remember years ago when oil was actually negative, they were actually paying you to buy oil. But remember, it wasn't as simple as that. You would have to take delivery of 100,000 barrels of oil and store it somewhere. So it's not quite as easy as it sounds when, oh, they're paying me to buy oil. No, it's not quite that easy. But my point is that what if oil completed this head and shoulders? And by the way, it hasn't broken yet. It has not broken, so it's not triggered. But if this triggered and it completes the pattern, what does that tell us about the economy? And that's the scary thing. And again, hopefully that doesn't come into play. We'll have to watch and see. But again, if you measure this out, you're literally going all the way down to basically sub $10 per barrel. All right. Wanted to just touch base on that chart there. Bear with me as I erase these lines and we can get into just a couple more charts here. All right, one of them I wanted to showcase is the lithium chart. So this is the Global X Lithium and Battery Tech ETF, symbol LIT. Notice again, we've been in a downtrend, but there is a level where I think there's a swing trade opportunity. If I look at a past pivot high, we go back right here, okay, and we draw that trend line out. Okay, so again, you guys can see this, right? We look at this pivot point right here. This was the highest point. Why is it a pivot again? Because price went up and then it came down for a significant amount of time. That creates a pivot. We broke out here. We had this big bull run. We're now getting close to this level. It's around $40.50 to $40 on the lithium chart or the LIT ETF. So that's some level that if we come down over the next few months, I will be looking at as a potential player on the long side. Remember, these are swing trades. I'm not going to speculate on lithium for the next 12, 10 years or anything like that. It's purely based on you look for a technical bounce for a couple weeks or a couple months off of that level. Okay, maybe it's a long-term buy there too. I just honestly, the further out projections go, the less they have the opportunity to actually, or the less they'll play out. Probabilities, because you have unforeseen, and this is a good little educational piece, guys, is that when I'm looking at charts, my best success rate in trading is day trading. And the reason day trading for me is so successful and I have a plus 90% success rate is because you're dealing with such a small time frame. You're dealing intraday, and sometimes it's seconds or minutes that I'm in a trade where there's not extracurricular things that can happen. Once you start holding stocks overnight or crypto overnight, you start hoping that nothing happens in Asia. You hope that no new wars break out. You hope the Fed doesn't speak. You know, there's so many other things that can kind of cause a hiccup in your trade thesis that, again, probabilities, the further out you go, there's more chance that something goes wrong in the world even, or in the economy that influences your trade. And that's why, again, the best projections on charting and technical analysis are going to be shorter term versus longer term. So again, I may speculate that, hey, I do think that eventually late in the 20s, we're going to have a 100-year cycle, the Great Depression. I think there's something like that coming. But honestly, you know, I think eventually we all agree it's probably coming, but is it going to be in 25, 27, 29, 31, 20 to 2035? I mean, you don't really know for sure. Timing is unbelievably tough to gauge. All right, guys, back to center screen here. I just wanted to say, as always, guys, it's awesome to bring you guys this information. I think that, again, talking about the spot ETF of Bitcoin, it's one of the big things in the news right now is good to talk about. And you have to just kind of think about it logically. It's not to say that I'm not a huge long-term bull on Bitcoin, but I do want people to understand that the GLD, when it was launched as a gold ETF, the run was not just because it was launched. There were other mitigating factors that had contributed to that run. And again, looking at the lithium chart, stuff like that, very, very cool to just kind of go over. Thank you as always for your support, guys. You guys seriously rock my world. I appreciate it. Keep watching, and I will keep bringing you my A game every single day in the game plans. Check out verifiedinvesting.com. Have a good one, guys. Take care.